Hey everybody, welcome to Easy Markets Daily Pitch International with me, Darius Anucauskas. Today is the 14th of June, 2023. So yep, welcome everyone. Welcome to this Wednesday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we go further, as always, let's quickly have a read through our disclaimer. So, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll give you a few seconds to read the rest. I'll disappear from that little left corner in there, and I'll come back in a bit. Okay, so now then, also just before we jump into the charts, just a quick mentioning of our Easy Markets website, which you can always check out for more information about us, guys. So let's jump into the charts. The first one I want to pick up here is Nikkei 225, guys, and look at this. Fantastic move to the upside. Yesterday, as you know, we got some news, some CPI news from the US, and those were lower than the forecast. And this, of course, gave that positivity that there won't be any interest rate hikes or anything like that. So, and to be honest, I think that's going to be the case. But look, I'll get to that in a bit when I'm going to jump into the US indices. But look, Nikkei 225, fantastic rally. My targets keep on getting reached, and I talked about this. So I said that if we do pop above this 32,733 mark, I will go higher because a forthcoming higher high will be confirmed. My next target will be the 33,000 mark. Then the next target is the 33,500, approximately around there. So we got that reach. Look, at this point, I will take a pause a little bit because although I am still leaning towards the upside, my next target is the 34,000 mark. But still, I have to be careful, cautious, and look, we did have quite a decent up move already. So, need to be a little bit more careful. I would suggest not to chase the market here. Look at this straight move here from this 31,000 kind of like 500 zone all the way to 33,600 in a matter of what, like just a few days. Yeah, that's quite spectacular, I would say. So, long story short, I am kind of, for now, I'm just chilling. I'm just observing the price action, although I'm leaning a little bit more towards higher levels, but actually I would prefer to just kind of wait this one out. ASX 200, also decent move here, but this one's a little bit on the modest side. Because look, we did push above this 200-day EMA. I talked about it. I also mentioned this 7,177 territory. We climbed above the 200 for now. So in a way, there is kind of more potential here to the upside right now. My next target is the upper side of this falling channel idea, and then I'll go from there. If we clear that channel, the upper side of it, then yes, certainly I will get a little bit more excited with the upside, and I'll target this 7,315 level. China 50 index, also decent, a decent up move here. Look, with China, it's a little bit difficult because I think that there are some reports that there are some real estate issues in China. I mean, it seems like there's not enough of it. But okay, look, we'll see how that's going to play out because, in a way, if that's the case, if there's not enough of it, then basically why we're seeing maybe a little bit of weakness is that if there's not enough housing, that means it creates inflation because there's a bigger demand. It raises inflation, and that means that the central bank will have to kind of increase rates, and that's not good for the stock market. So, but again, it's only a theory. I mean, there's probably something else to it. We need to dig into that. But at this point, we're seeing, yes, from the technical perspective, we're seeing a break of this downside line. Okay, we went higher, and I said to you that if we do push through this barrier, then yes, I will go further north, but I'll aim only initially towards the 50-day EMA, and then we'll go from there. For the downside, well, this is the point where I need to probably get rid of this downside line. This is a short one, and for the downside, I would rather wait for a drop below this upside line here, and then yes, we could consider a correction here to the downside. So, long story short, if we do break this upside line, then that's where, yes, from where I will get a little bit more comfortable with lower levels. Now, India 50, Nifty 50 index. Okay, look, this one's interesting. So, yes, we had that little rebound here. Not exactly from the upside line, but it still was close. And we still got that move. So, look, how we can play this one out further. For now, of course, yes, as long as we stay above this upside line, we will continue targeting the upside. Once we start breaking this upside line, that's going to be our cue, maybe to start considering slightly lower levels, and we could see a nice corrective move here to the downside towards this highlighted territory, which is roughly between actually, should I say, roughly around the 18,500 level. So approximately around there. So that's going to be, like I said, my next target if we do break this upside line. But for now, we're above it still, and there is hope that we could see some slightly higher levels. Now, let's jump into Nasdaq, the US indices. Okay, look. This is the interesting bit right now. So we got the numbers yesterday, the U.S. inflation numbers. And, okay, those were on the lower side. The market kind of enjoyed the moment. The headline CPI went from the previous plus 4.9 to plus 4%. Period. The month-on-month figure, the headline CPI was down from plus 0.4 to plus 0.1. So just 0.1% above zero mark. So that's good. The only problem in all this are the core. So the core, which excludes energy and food, did not decline. And the year-on-year one declined by just a little bit, from 5.5 to 5.3. The month-on-month one did not. So, look, and the way my the heading of my video states that for sure the Fed will not hike, right? Well, to be honest, yes, it will not hike most likely, because looking at this picture here, the Fed Watch tool, I mean, you can see that it's just kind of straight on that they're not going to do anything. Now, of course, there are some talks right now. Will they cut? Look. In terms of cutting rates, I don't really think that could happen, because in a way the inflation is still high. If you judge it from the perspective of the Fed's inflation target, which is around 2%. So, I mean, around 4%, the headline, core being 5%, and the target of 2%. A little bit still too much. So maybe they won't hike, but for sure I mean, nothing's sure, but there is a good chance that they are not going to cut. So although, people are talking about this, if they cut, wow, that's going to blow up the market. I mean, in terms of it's going to go higher. And yeah, this in a way could bring inflation pressure back on everything, and we could see that a bit of a problem here. But hey, okay, because then we will have to just kind of go back again. So that's why the rate hike, the rate cut option. Okay, it's on the table. Everything's on the table, but I don't think that it's going to get used in the near term, unless really inflation starts dropping heavily. For example, if I think that there are some reports saying that before the end of the year they're looking at something like 3 point something, 3.3 or something like that. If let's say we start getting to that number earlier, that's when we could see earlier than, let's say, the end of the year. Then that's where we could see maybe a bit of a rate cut. The reason is that then I think that the market would, the Fed would be worried about deflationary pressure. So, and I've mentioned that already in one of my webinars, that deflation is also an issue and also could be a problem. So, yeah, because although the unemployment numbers are, okay-ish, but I don't think that they're showing the true picture of what's happening, because again, people are getting laid off, and yeah, it's becoming a little bit tricky, and people just started saving and nothing else. So not much is going back into the economy, in my opinion. So anyway, look, we can speculate as much as we want, but one thing for sure, we can have a look at the technicals, and we can see that we broke the barrier, my barrier right here, and we broke that 14,725 territory, and we stayed above it yesterday. So if by any chance we start drifting back to the downside, then a drop below this 14,642, yep, this is something that I will be keeping a close eye on. And then, yeah, we could consider maybe a bit of a larger correction here to the downside. The reason why I'm saying correction is because we are still above this upside line. So any throwback towards that upside line could be classed as a temporary correction before another possible leg of buying. Daredevil Dave, good morning to you too. I can see you there in the chat room. Thank you very much for your comment. Really appreciate that. Good morning. Yeah, good morning to you. Good morning to everybody else who's out there, who's tuning in. And let me just put this one into the chat room. There we go, guys. Good morning to everybody else. I mean, who I hope everybody's having a wonderful start of Wednesday. Look, like I said, the situation is this, that we are keeping a close eye on today's Fed. It's going to be very interesting to see how, let's say, if they stay with the no rate hike, no rate cut. It will be interesting to listen to the press conference, because in a way, everybody's already like pricing that in. And I think that the market, you can see that it's already pricing it in, that, there's not going to be a hike. And I think this is what the whole rally is about. And I think that the rally might continue. The only thing is that we might see a corrective move lower in case, let's say, just somehow if the Fed comes out saying that, we're still seeing, headwinds, and we're still seeing problems, that the inflation could get out of hand, and maybe that's where, maybe the bit of weakness could come into the market. But let's not over speculate. I would say be careful, be cautious, have your stop losses in place, and risk only what you can afford to lose. My traditional thing that I keep on saying. S&P 500. S&P 500, look, we cleared some barriers, great. I talked about those. 4,355. Well, first of all, we cleared the 4,327. I talked about this on Monday. We jumped above it. We stayed above it. Yesterday, we kind of retraced a little bit, kind of stayed above that hurdle still, and pushed back up. And we cleared the 4,355. Look, I think that for now, what we can do is let's grab this line and mark our next potential target, ideal target, I would say 4,630. Now the question, will we get there? Okay, this is a good question. I think that before that we do have another little obstacle which I need to mark, and I think it's going to be this one right here, this 4,585. This is going to be my target, my main target for now. Well, actually, I would say for now, my target is this, the 4,509. But if we do cross that, then yes, this is before potentially aiming for that 4,630. 4,585 could be a good one because, look, it did act as a good area of resistance back here on the 2nd of February of last year, and also near the 9th of February, and also near the 5th of April. So potentially a good area of resistance, but again, of course, we still have a big path to go there. For now, I am just, like I said, I'm just going to target this 4,509 zone initially, and then we'll go from there. Dow Jones Industrial Average, we are near a key resistance barrier. Looking at the picture here, sorry, I'm a little bit warm. I think of all the excitement about today's day. And that it's a little bit hot in here in this room, but anyway, although I have the AC on, but okay. Look, the barrier, the area right here, the one that I talked about, and I said to recently that, look, if we do pop above this barrier, the 33,850, my next target is this area right here. Boom, tick. Congratulations, whoever managed to capture that one. Great stuff. What's next? We need to tidy up the chart, I think. And in my opinion, I would like to remove all the drawings. I'll bring back some of the lines, but I want to restart this one fresh. So after we cleared that barrier, this one right, well, just slightly below that, of course, somewhere around here. Yep. So we cleared this territory and we went higher. We ended up almost testing the highest point of May this year, of course, near the 34,363. We did actually test the area around here. So in other words, we kind of tested the area in between these two levels. So in a way, you're not going to be wrong if you're just kind of sticking to, this whole zone right here. Now, what I need further is, of course, a clearance of this territory. If we do clear that territory, then yes, I'll go a little bit higher. We do have some targets here, like, for example, the highest point of February of this year. I think, that's the highest point of this year, the current highest point of this year, near the 34,550 zone. Okay, good potential target, guys. Good one. I like that one. I think I'm going to go for it. If we do clear this highlighted territory right here. And then, yes, I'm going to aim for this one. Look, in general, I'm still a little bit bullish on the stock market. However, don't get me wrong, I do accept the fact that maybe there could be a correction at some point, and everybody is talking about a correction. Everybody wants a correction. But when you look at Dow from this perspective, I mean, look, this seems to be trying to form some higher highs. It is already forming higher lows after, since we kind of reversed higher here in October, at the the beginning of October of 2022, we reversed to the upside. We created this nice double bottom pattern, and we pushed higher. Now it seems like we're in little consolidation, and also just noted, and I think that sorry, Hunter Eagle 25, can you please share tips on EURUSD, AUDNZD, and USDCAD? Look, I have the Hunter Eagle 25. I have the list here on the right. Of all the instruments that I'm talking normally in the video, so you can check those out. This is the sequence that I'm going through, and the only one that I don't have here is NZD USD, but I will pick up on that at the end. So I need to go through mine first, and then yes, then, well, where's my NZD USD? let's put it into the list. There we go. So I'll pick up on that one. Euro, AUDUSD, USDCAD, EURUSD, all those I have here on the chart. So I'll pick up on that. But coming back to the Dow, guys, what I'm interested here is one thing really. Looking at the formation here, and some of you are going to be already following what I'm going to be saying here, is a potential inverted head and shoulders pattern. Something maybe among the lines of this. Again, it's very tricky to draw here. Maybe something like that. Beautiful in general, I would say quite beautiful. And if that works out, if this highlighted zone of mine will get broken, then potentially this could open the door, yes, to some higher levels. So at this point, look, if this is a left shoulder and this is the head and this is the right shoulder of an inverted head and shoulders pattern, congratulations, guys. We could see some higher levels, but yeah, let's not rush into anything. For now, like I said, it's just an idea, a theory. But hey, you know, and even some crazy ideas sometimes work out. So just kind of be careful and cautious with that. The German index, DAX, okay, good move yesterday. So yesterday we saw this interesting moment. So at the beginning of the trading session in Europe, we saw a correction back down. We did stay above this 16,063 territory. I spoke about that level, this area previously. This was my barrier for the upside. And yes, now the next target for me is maybe this area around here. However, I think it's this is a good target in a way. These two levels, the highest point of November of 2021 and the highest point of January of 2022, which are near the 16,274 and 294 levels, respectively. Then yes, this could be a nice good area of resistance. But of course, what I'm watching here is this 16,374, because look, in general, I want to see if this is not going to end up being something like of a double top here or something like that. But another thing that I need to adjust, I think it's these upside lines. So, the previous channel, which I used here, but another thing, no, this is what I wanted. I think my wedges are not working here, so no. You know what, this can go away. I think that we can just stick to this upside line. So for now, I would say this way, even if we do retrace back down, as long as we stay at somewhere above this upside line, yes, we will continue aiming to the upside, but only I'm aiming for this territory right here, somewhere around these lines. And then if we do clear that, great. A forthcoming higher high will be confirmed, and then we can go further north. But at this point, I'm saying that, you know, I'm just kind of being careful with this at this point. Right, FTSE 100, guys. FTSE 100. Honestly, I spoke about this one. It's like it's giving me that frustration. It's giving me that frustration with like DAX was giving me. So at this point, look, until I get my clearance here of one of the lines, I'm not really doing anything. I'm just observing the price action because currently it's just oscillating around the 200-day EMA. Fabulo, morning. What TF do you enter on, sir? Sorry. Fabulo, I didn't really quite get that. What did you mean exactly? Could you specify, please? And I'll pick up on that. But thank you very much for your comment. US dollar index. Look, we did drop nicely here. I said to you that, look, I'm considering this to be a possible descending triangle pattern, and I said that I need to see a clearance of this zone first in order to go further south. But by further south, I mean my EMAs initially, and if those get clear, then it's the 102.84. Good result here. I would say good test of these two EMAs. So what's next? For now, look, this barrier, this hurdle, is doing a good job and acting as a resistance. So if we somehow continue to trade below it, then yes, I'm aiming for the 50 and the 100. For the 100 and the 50-day EMAs, shown as the green and red lines respectively. But given that it's a Fed day, yeah. Look, we could see a roller coaster ride. We could see a shoot up, a sharp shoot up, or a sharp decline, and something like that. So just keep that in mind, because I think that the market will need to settle first before it will be I think it will be a bloodbath first. Everybody will be jumping in here and there, and it was going to be up and down, and but then once it settles down, once it kind of we'll see who's going to take the steering wheel. Will it be the bulls or the bears? And then we can do something about it. But at this point, guys, I would say this way: if it wouldn't be for the Fed today, I would just continue to kind of aim lower, because we are still below that 103.40 territory, my barrier that I looked at before. So at this point, yes, I would, like I said, I would go further south. But because it's a Fed, I'm not excluding the opportunity to see some sort of like I said, a bounce around here today. But keep that in mind. Check your economic calendars for when it's coming out in your region, and then yes, we could, we will go from there. Basically, I would say let's leave it for now. Yes, I'm leaning towards the downside, but again, I'm not excluding a sharp jump up. So it's just it's just going to be, I think, a toss of a coin at the moment, until we understand who's going to take the control. Fabio, what time frames do you do your entries, sir? Thank you very much for the sir. Don't feel like a sir, but thank you very much. But look, in terms of time frames, I do look at the overall picture on a daily chart, because the daily chart gives me a clear indication of what could happen. I look at to be honest, over the years, I've become a little bit more cautious and careful, and I do look at all the time frames: 1 minute, 5 minutes, 15, 30. But the thing is that sometimes it's getting so overcomplicated, right? That you're thinking that, okay, I'll check the 5 minute, okay, I'll check the 1 hour, maybe the 4 hour. Well, let's see. But actually, then you can see that suddenly that they might be giving you different signals, and and if you have a proven strategy, let's say on a 1 hour chart, right, stick to it. I think that don't overcomplicate. For me, the proven strategy is on the daily chart, and I stick to that. For me, like I said, it works this way. What works for me? Look, when I'm analyzing this, right? When I'm like showing you the charts here, it doesn't mean that you have to stick to the dailies or something like that. No, you understand. Like, I'm showing you where it could potentially go, based on what, and based on the daily chart in general, because the daily chart shows you the bigger picture. Because you, on the 1 hour or in the 15 minutes, you have the noise, right? The daily noise that jumps around, but then actually the daily chart could show you the direction, and that's how you can apply it on the shorter time frame. So you can let's say keep in mind that on a daily chart is giving you that the direction will be, let's say, to the downside, right? And you can adjust accordingly on the shorter time frame. For example, if you see a spike higher and you really believe that the market will, or let's say that instrument or that asset class will go lower, okay, you can jump in, let's say, on a higher move, and then just try to capture that one and then go down. Look, again, there are so many ideas, theories. I don't believe, in my personal opinion, I don't believe that there is, let's say, a holy grail or something like that. No, you have to figure out what works for you best. Like I said, for me, something like this works. Maybe for you, it doesn't work. So, like just, I wouldn't say that there is an answer to this, so what's the best, or like what time frames do I use? Sometimes on one instrument, for example, I use a daily and a 5-minute. On the other instrument, I use a daily and a 1 hour. On the other instrument, so it's like really, I find if I find some sort of like patterns which are clearly visible on a 5-minute chart on an instrument, okay, I'll use that. If let's say if it's an index, I'm using a 5-minute. If it's a currency pair, then maybe I'll actually jump into the 30-minute chart. Again, it really depends. So try to find your own thing. Try to find your own strategy and find what works well for you. Maybe it's a combination of different strategies that you've seen on online somewhere, or you read somewhere. Hey, use it. Whatever works for you. You are the ones who are pulling the trigger on your account, basically. So you don't have to listen to anybody, and even me, honestly. What I'm telling you here, it's my opinion, purely. So it's not really. Let's say maybe somebody doesn't agree with me, and that's fine. But I see it this way, and I'm sharing with you. And then maybe you're after this video, you're going to come out saying, you know what, I don't like it. And you know what, forget about it. And that's why I'll maybe find somebody else who shows a different opinion or something like that. So it's all fine. It's all fine. Everybody, like I said, everybody's different. Everybody has to find their own strategy. Let's put it this way. Coming back to the instruments, gold. Look, I talked about this yesterday. I said to you that I'm going to take a very simplistic approach on this because, again, gold has been annoying me a lot lately because of this movement, the sideways movement, and honestly, this is just not really working well. Yesterday, we broke this lower side of the kind of triangle pattern, the one that I have drawn yesterday. So if we do again clear this lower side and stay below it, yes, I will go lower. In general, guys, something is hinting that potentially this could go further south. And in general, Fabulo, helps a lot. I get the idea. Okay, look, I'm happy that it helps. You're welcome. I don't have anything else to say, but thank you very much. Thank you for your comment. Thank you for your question in general. Look, gold. In a way, if you apply normal standard technical analysis, here is basically this: that we have a triangle right now, but the prevailing trend was to the downside, meaning that according to all the TA rules, technical analysis rules, that the breakout should happen to the downside. Well, to be honest, whenever I have doubts like this, or let's say I really don't get it. For now, gold, for me, it's really unclear, and I'm trying to be very cautious. It's like I said, it's getting on my nerves a little bit, but okay. Whenever something like that happens, I think that we need to step away from it for at least, until we get some sort of a clear direction. But at this point, I will probably stick to the downside. Why? Just because I have my justification, which is a book, the rules, the technical analysis rules. Look, it might reverse and push higher. If it does that, great, I will examine the upside, but I need to see that confirmation break through the upper side first, and then I'll go higher. But my next target will be only around this 1984-85 levels, approximately around there. If we do clear those, great, I'll go further north. But at this point, I am just, I'm just waiting for something to happen. Not my ideal scenario, but what can I do? Maybe the Fed will shift the dollar, and that maybe the dollar will, give its effect on gold. Similar story with silver. Look, this one's a little bit more clear, I would say, or clearer. For now, I am keeping an eye on this rising channel pattern. We are testing the lower side of it. We're still above it. We're still above the lower side of the rising channel. So in a way, again, according to the T rules, until we get the breakout, we cannot really discuss any other trend apart from the upside one here. However, if we start clearing this lower side of the rising channel and stay below it, I will go lower. Especially if we also drop below the 100-day EMA, and then yes, the next target for me could be somewhere around here near the 23.25 level. Oil, beautiful rebound. Look at this beauty. 67.04, or actually, let's put it this way: we rebounded from the 67 territory and we're now pushing back up. I said to you yesterday, if I want to go higher, I need to see a clearance of this downside line taken from the high of the okay. It's not really a very logical line, I would say, because this is capturing the Sunday candle here that we have. So look, what we can do here is maybe capture the Monday's candle here, and draw something like this. Maybe that could be a little bit more clear, but either way, you know what? I'm going to stick to that for now. If we do clear this this territory and we push above the 70.13 level, somewhere around here, I will consider some higher levels. For the downside, yes, this level here is still needed for me. As long as we remain below the downside line and somewhere above this hurdle right here, I am just gonna remain neutral, and I'm just gonna observe the price action. If we do break the downside line, great, yeah, I'll go higher. But if we do break the 67 territory, I will go lower. Simple as that. Because a forthcoming lower low here will be confirmed. Dogecoin. Look, I don't have the main ones like the Bitcoins and Ethereums and Litecoins and other. Just because there's not much happening. For now, we're just kind of flat, and yeah, not much is happening. So the only thing is that I found excitement here in Dogecoin. So look, we're still below this hurdle, this lowest point of March of this year. And as you can see, we've created a new low for this year. We went somewhere to this area. Well, at least that's on my chart here, the 0.0540. Okay, I'll keep that in mind. Look, as long as we remain below this lowest point of March, I will stick to the downside. Yeah, the 0.0626 territory, I will stick. If we continue to trade below it, I will stick to the downside. The only, and I'm not saying that I'm going to aim for the 0.0540, although it could be quite interesting. But what I'm going to say is that I will consider maybe something around this. Let me just have a look. No, I think that's, well, could be, but not ideal. Let's see if this is going to be better a little bit, something like that. Look, I think, yeah, okay, let's go, because they're both tentative, and actually it seems like I'm trying to find something where it's not. The other option here is to consider maybe a falling channel. Actually, you know what? Let's try to do that. Let's see if this is gonna work. Okay, something like that. Yeah, why not? Why not? Look, a falling channel. Could be the case. So that means that if we do slide a little bit lower, I want to see if we can rebound from this territory somewhere around here. Don't get me wrong, we might get a breakout or something like that. It's not exactly the line here, but the area. But sorry, not the area, but the spot. I'm kind of aiming for the area more. So around this territory. So if we do kind of hold somewhere here, then great. Maybe a bit of a rebound here could be possible. AUDNZD. You know what, NZD, I need to push it here a little bit higher. AUDNZD, guys, I talked about this one yesterday, and I said to you that, look, I have this upside line, which in a way is something that seems to be working. We had a decline yesterday. It tested this upside line. We rebounded. We're now rebounding from it. Question, can we see a rising channel here or not? Well, we potentially could. So in other words, if we continue to trade above the lower side of this potential idea of a rising channel, then yes, I am aiming for the upper side of the rising channel. But I'll probably get more comfortable with higher levels if we do push somewhere above this zone, this 1.1033 area, approximately around here. However, look, some of you are probably thinking that, hey, maybe this is way too long, maybe we could keep an eye on this. Actually, you know what? This level is quite interesting. So yeah, the 1.1021. Actually, you know what? Let me rephrase that. AUDNZD 1.1021. That could be an interesting one because you can see that it did provide resistance recently. We had some false breakouts. Because these are false breakouts. So if we do clear this and stay above it, yes, I'm gonna go towards this upper side of this potential rising channel idea. AUDUSD. So, okay, my target got reached. My target was this area between these two levels, the 0.6797 and the 0.6818. So we just kind of bang on in the middle. We hit the area, you know, the area here, the hurdle, the territory here between these two levels. So that's great. It just kind of proves my point that this is quite an important level to watch, to continue watching. If you're looking for some higher levels on this one, then yes, further upside here, a break of this territory is needed. If you're looking for some higher levels, then yes, a break of this highlighted zone is needed. However, given that we had quite a decent rally from the 0.6458 all the way here towards that 0.6768 territory, wow, that's quite a decent up move. So maybe at some point I would like to see a bit of a correction. So I'm going to look at it this way. If we continue to trade somewhere below this highlighted zone, I'm going to consider maybe a bit of a retracement here and something like that. You know, maybe at this point, like I said, I'm still yet to determine which is going to be the peak here, because if I draw my Fibonacci, which I need to fix again, if I draw my Fibonacci here, look, if this has been the peak, yesterday's high was the peak, then yeah, maybe a correction here back to the 23.6 could be ideal. That's roughly around the 0.6725, something like that. If we do clear this one, then yes, the next target is the 38.2. So everything's kind of getting aligned nicely around these EMAs in general. So the only thing is what we're missing right now is to understand if this is going to be that, you know, that peak. The yesterday's high is going to be that peak. I have a bit of tea in my cup, so sorry for that. Okay, look, for now I would say it's a little bit of a gamble here, because if today's day, I mean, I would say let it settle, let it ride, you know, let the Fed do its job, and let the market, let the bulls and bears kind of slaughter themselves, you know, during that, during or the after the Fed release, Fed interest rate release. So let's see that. Let's see that kind of action first, and then we'll decide. If we do, let's say, pierce through this highlighted zone, we go higher, but then we, at the end of the day, we drift back down and stay below this. That's where I'm gonna draw my Fibonacci higher a little bit, you know, and maybe it's gonna be somewhere around here. It actually looks nicely. If you, let's say, we assume that maybe we'll go higher here, we'll peak somewhere here, and the 23.6 looking quite good here, the 32.8 looking quite good here. So look, now the 50 is looking fantastic. So actually, if to be very, very biased and to be wanting what I want, so I would actually like to see a strong push here to the upside, a test of this area somewhere at the 0.6825, and then a drift back down. Then I'll have a beautiful 23.6, a beautiful 38.2, and a beautiful 50%, not to mention the 61.8, honestly. So yeah, this is called being very, very biased. So that's why let's get rid of this. I'll pick up on this tomorrow. Just out of curiosity, I want to see if this is going to work or not, but I'll remove that just not to overcrowd the chart. But at this point, look, I'm not really doing anything. If you want some guidance on, let's say, where to kind of sorry, I'm reading a comment here. Hunter Eagle Daily. Okay. If you're looking for some guidance, or let's say what could happen, like anything could happen. Honestly, this is one of those days where it's gonna just, you might enter a buy and sell at the same time, and try to see which way it's gonna go. You will see that it might be madness. It might be just one. But then the question is, where do you exit? This is the timing of the perfect exit. That's where the problem starts. So that's why I say, let it settle. Let it wait for it. I mean, if you can afford to gamble this, okay, be my guest. But the only thing is that you have to take into consideration that you might lose it. So, you only lose what you can afford to lose. So, yeah, guys. Anyway, if it would be a normal day, I would say I'm considering maybe a bit of a correction here, back down towards this 200-day EMA. But because it's not a normal day, it's very, very difficult to predict where this is going to go. I am leaning a little bit more towards the upside, maybe because of my bias here. But I would like to see a spike here to the upside and then a drift back down. So let's see if that's going to happen. AUDJPY. Okay. This is a short seller's nightmare. We are still traveling higher, and I think that look, at some point, what you need to do on this one is to stay focused on the stock market, because this is kind of an indication, like this is an indication like that, an indicator for a risk-on, risk-off environment. So whenever we have the stock market rallying, we have, AUDJPY jumping higher because everybody's, the sectors are performing, the markets are performing, nobody's buying the yen as a safe haven, and that's why everybody's, going higher here on AUDJPY. Once the stock market starts shifting to the downside, everybody's into the yen. Let's protect ourselves, and that's why until we see a clear move to the downside in the stock market, I don't think that this pair will shift lower. At this point, I'm just continuing to aim higher. The only thing is that I'm not really if I missed it, I wouldn't be entering here, because I've missed this. I need a decent correction before I could, let's say, aim to the upside again. So at this point, I'm just observing the price action on this one. My ideal scenario here is a test of this 95.75 territory, and then, but if we do start falling back below this 94.15 level, I talked about this barrier yesterday, by the way. I said to you that if we clear it, I'll go higher, and yeah, we cleared it and we went higher. So great. A four wall, what do you think on gold currently? I already looked at gold. It was here. So look, I mean, just once the video finished, you can rewind it, and I need to continue with my instruments, because this is normally the sequence that I go through. So every morning before, you can see actually before the start of the video, you'll see the instruments in the description that I'm going to go through. And this is, like I said, this is normally the sequence that I go through. So just in order, with respect to other viewers, for all, I will continue with the rest of the instruments because I already talked about it. But like I said, normally I go through indices, commodities, cryptos, and then forex. So that's my kind of structure. NZD, USD. I haven't looked at this one for quite a while. You can see by the shifted arrows here and lines and everything like that. But okay, look, I've previously talked about it this way, that we were in this kind of a range thing here. Not really ideal, to be honest, but somewhat. I think that we need some adjustments here, and for sure, as quick as possible, because this chart is becoming very difficult to read. But one thing for sure that worked out for me was that if we do push back above the 0.6085 territory, somewhere around here, I'll go towards this downside line, taken from the high of the 11th of May. boom, fantastic, reached it. But I think that the 50-day EMA was around here, and that's what we reached first. So, or not first, but mainly. Look, I think let's adjust this. Let's reuse this downside line. Let's recycle it. Always recycle, guys. There's a hidden message for you there. Yeah, look, this upside line, I think that could be a nice one. So we actually pushed above it. So we're correcting back down, but we're still above this upside line drawn from the low of the 8th of March. So as long as we stay above this, then yes, potentially we could go further north. However, I think that to be a little bit more on the careful side, look, let's put it this way. If you are looking at some higher levels and you want to aim higher, the more convenient or the safer option could be just to wait for a push above the 0.6182 territory. However, there is an option here as well to see maybe we get a rebound from this upside line. So look, don't exclude also a false breakout here, so we could drop lower, but then let's say by the end of the day, if we come back above this, then yeah, maybe this could, you know, signal a nice move higher. So in other words, I think this could be a risky trade if you start going long here right now, but I would say you would have to, if you can afford to have you know, a wide stop loss, okay, maybe that could be a case. Because look, I would say if we start falling back, not below this, but let me just highlight this. If we start falling back below this little hurdle here, then yes, I will consider some moves to the downside. So that's my downside, could be my downside scenario. The only problem that I have with this downside scenario is this here. There we go. So this upside line. Okay, tricky one. This one, it has opportunities, but at the same time, it's a little bit difficult. Look, I think I'm gonna stick to this for the upside. If we continue to trade above this upside line, taken from the low of the 8th of March, I will remain bullish. If we start falling back below it, I'll take a neutral stand. Then I'll see how we perform around here. If we start clearing, let's say which one's going to be first. If we start clearing the 0.6111 territory, then yes, I'm keeping an eye on this upside line. So that's going to be my confirmation break to the downside. But if we, let's say, shift around here a little bit, we start clearing this upside line first, and then we hit the 0.6111, then yes, my downside scenario will come only from this zone on a break of this territory. So something like that. USDJPY. There we go. There we go. That's what I was saying yesterday. I said to you, wait for it. Wait, although we were seeing a nice descending triangle pattern. How many times I've seen this happening in the opposite direction? So basically, according to all the tier rules, this one should break to the downside because it's a descending triangle, and you know, where you could break through the lower side of it may signal a further move lower. Yeah. Theoretically, but like I said, we need a confirmation break all the time. I didn't get my breakout here. I got a tease only, and we instead broke to the upside here. We broke the upper side of the triangle, and look, I'm not saying that this is now, that's it. From here, we're going to go up, up, and away. No. For now, it just means that, look, we got the breakout, and if you manage to capture it on the breakout here, great, congratulations. Now, if you're still in that trade, now you quickly put yourself on a break even, because if this suddenly reverses back down, and it could, because, again, we have a super awesome day today because of the Fed, so if it does drop back down, then look, you're at least you're not going to lose. Maybe it's going to go back down and starts clearing this territory. So it could still be the case. That's why we need to position ourselves carefully. For now, I am aiming higher. How it will go, we don't know. That's why at this point, if we just leave it as it is, then yes, potentially this could attract more buyers, and more buyers could join in, and we could go towards that 140.93. That's actually my main target right now. I'm watching this one. If we do clear it, great. If we don't, then we have ourselves something of a range.
Who knows? But at this point, yes, I'm just aiming for this territory, the current highest, or sorry, not the current, but the highest point of May. USDCHF. I've talked about this one yesterday. I'm not going to spend too much time on this because, again, this is just not doing much. So for me to go higher, at least for some levels, I need to see a push above the 0.9107. For the downside, I'm taking a conservative approach here, and I'm waiting for a drop below the 0.8986. Now, for the intraday short-term analysis, let's say, for the upside, maybe you could start looking at some higher levels already from this 100-day EMA. If we do clear it, then yes, I'll go higher. For the downside, maybe a drop below the 50-day EMA could open the door to some lower levels, somewhere till around here, towards this 0.8986, 85 territory, approximately around there. And then, yeah, we could go from there. But look, I'm not going to be surprised. I'm not going to be surprised if we somehow magically stay in between the two trend lines, two EMAs, the 100 and the 50. And then once the Fed comes out with something, then we'll see some sort of action here. But yeah, like I said, don't be surprised. So at this point, I'm just observing the price action. I'm waiting for some clearances. And for the downside, I will start looking at some lower levels on a drop of this territory. But let's face it, if we do move lower and we find good support from around here, near the current lowest point of June, and then we rebound back up, maybe we'll get ourselves a nice, beautiful range later on. But we'll get to that point. USDCAD. So, okay, finally, yes, breaking the territory. Right. This is where the tricky bit comes in. It is moving lower because we have a nice move in oil to the upside. That's why USDCAD is moving nicely to the downside. It's not that the dollar is weak or something like that. Okay, we saw a bit of weakness yesterday, but look, if the dollar today jumps higher, we could see, this pair pushing back inside. And I think that this worked well. I was talking about this idea here about this upside line. It worked out nicely. Initially, it acted as a good area of support. We rebounded. Then I said to you that, look, if we do correct back down, but we stay above this upside line, I'm going to consider something like that. We broke the upside line, and this is what I said, that if we break, I'll go lower. My ideal scenario was towards this 1.3262, but I'm currently seeing a hold up somewhere around here. So that means that this is becoming quite an important area of support, and I think that we should not ignore it. And I think that this will be something to watch out for. If we do drop again below it and stay below it, then yes, I'll go further. I'll go further south, and like I said, my next target is going to be the 1.3262. But if this area somehow continues to provide support, guys, maybe we could see a bit of a roller coaster ride here, and we could see a push, back to the upside, especially if we climb back above this upside line. If we do that, I will consider a move a little bit to the upside here. Some of the levels need to be adjusted. Yep. Okay, I think that maybe this. Look, also just for that extra confirmation for some higher levels, a push above the 1.3384 territory. If we do push above this barrier, then yes, potentially this could open the door towards some higher levels towards this 200-day EMA. I'm sorry, I was reading Orwell's question. What will be the effect on USD if the Fed is shifted? Shifted where? Shifted to what side? Shifted to what do you mean? This is the question. I mean, I'm sorry. By word shifted, what do you mean exactly? Shifted to which side? Or if it's you mean if it's a rate cut or is it a rate hike? I've talked about this already in the beginning when I was covering the indices, but with the USD, look, if we do increase the rate according to the economics, if we have an increase in the rate, then we have USD, for example, pushing higher, right? We could see that move. But again, a lot will depend on the press conference. And at this point, the The fact that we are, there's no rate hike. If there is no rate hike, then we could see a slow, gradual move on the U.S. dollar here to the downside. Because again, everybody's already pricing that in, that there's not going to be a rate hike, and I think that this could continue sliding like that. So the movement here could come from the press conference, from the words what the Fed will say, and that's where all the activity could come. Because at the moment, everybody's expecting the same, no rate hike. Okay. And to be honest, if that's the case, if that's what they're going to come out with, we will see some action up and down here, and then eventually it might stabilize and might stick to some, to the downside here, unless the Fed or during the press conference they will start saying something that something very that they're not really ready to pull the cutting trigger, and most likely they will continue to raise interest rates, and that maybe could push the dollar to the upside, and maybe we could see those breakouts here higher, and this is what could stimulate the dollar, and this is where the indices could correct a little bit to the downside. But in general, I would say at this point we're, like I said, we'll see some noise here for sure. But we'll have to look at the press conference. We'll have to listen to the press conference, and we'll have to listen to what they say, and then we can maybe determine on what could happen. But that's kind of what we can do at this point. GBPCHF. So looking interesting because so I don't know, a 4 roll. I don't know if that answers your question, but I didn't really quite understand. Sorry, but what do you mean by the word shifted? What did you refer to? Anyway, GBPCHF. Right. My target got reached. I talked about this yesterday. I said to you that, look, maybe we'll get a little correction here. We did get that little correction, and we moved nicely to the upside. My target got reached here. My barrier was this 1.1414 level. Great. Mission accomplished. Team, we're heading home. Yeah, kinda. We can take a bit of a rest here, I would say. And look, I will say it this way: if we continue to push through this barrier, the 1.1414, then yes, certainly higher levels could be met. We could then start aiming for this one right here, the highest point of January of 2023 of this year. So look, yesterday we almost came very close to testing that area, and this 1.1436 level is something to be watched, and because this is the current highest point of this year. And I'm trying to find data today. Let me just, because I think that there's some data that came out. Yes, GDP numbers. Okay, that's why we're getting a bit of a correction here. GDP numbers. So month on month stayed. It actually came out as forecasted. Yeah, the previous one was minus 0.3. It came out as forecasted plus 0.2. The year-on-year number, it missed expectations. The plus 0.6, the expectation was, and it came out at 0.5, but it's still better than the previous. So, industrial production. Industrial production is on the low side in UK. But the year-on-year, the month-on-month was bad. The year-on-year was okay. Manufacturing was kind of okay-ish. So look, in general, actually, the data, it's not great, maybe a little bit confusing, but still okay. So I would say this way, that maybe this data will show that, a bit of correction here could be possible, but if we continue to trade somewhere above this hurdle, above this 1.1390, maybe still the upside could be possible. And actually, I'm going to be aiming for this area first, the current highest point of this year. If we clear that, a new high for this year will be confirmed, and then we'll see. We'll just go from there. Maybe we'll aim for something around here. Maybe somewhere around here, yes, guys. But oh, I've just noticed the time. I think I've done it a little bit over my time, guys. Oh, I need to rush. But look, my colleagues are gonna be jumping in right now. Oh yes, this is an hour. Sometimes is not enough. Anyway, for now, that's the upside. GBPUSD. Yeah, I'm sorry, guys. I'm gonna rush through this a little bit because it's already like 10. Yeah, it's 5 minutes over past 10. Oh, no, and sorry. Yes. Okay, guys, it's 5 minutes past my time. So, right. Okay. Look, we're clearing this downside line. I talked about this. And yes, mentioned this with one of the viewers. Can't remember who exactly was it. Sorry for that. If you're watching, apologies. I can't remember. But mentioned this this downside line. We're testing it right now. So look, if we continue to trade above it, I'm gonna go further north. EURGBP, still nice. I talked about this yesterday. This downside line held nicely. We fell below the 0.8567. So yep, further declines here are possible. The 0.8541 territory is something to keep in mind. Look, I'm still leaning towards the downside, but I'll get more comfortable if we fall below the current lowest point of June. CHF, a little bit of a correction. That's fine. Still to the upside potentially. And yes, I'm gonna aim higher as long as we stay above this highlighted territory. And finally, EURUSD. That's the speed analysis that I'm doing right now. So the nice thing about it is that my upper side of the rising veg seems to be working out nicely. We did have a clearance here yesterday, but we had a false breakout. So I'll take that and I'll still stick to my rising veg. Rising veggies tend to break to the downside, but a confirmation breakthrough, the lower side of it, is needed. So at this point, if you're looking for some lower levels, a drop below the 1.0760 territory would be needed. And then I'll go lower. If we want to go higher, then a push, I would say at this point on my chart, on my daily chart, a push above the 50-day EMA shown here as the red line is required. So if I get that, I will go further north, guys. But at this point, I'm just observing the price action because, again, we have the Fed. I will have to wrap it up here. Thank you very much. Apologies for the speedy analysis there because I just noticed that it was already 6 minutes after my finish time. Thank you very much for tuning in, guys. I really appreciate that. Sorry. For the fast analysis at the end. Look, join me tomorrow morning at 6 o'clock GMT time. We'll have a look what happened today, and then we'll go from there. See you guys. Bye-bye. See you tomorrow. If you want to continue to please the trading gods, subscribe to our channel for a blessing.